Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the closing edition of Market Today where we tell you everything that you need to know about the last half an hour action on the D Street today. Let's kickstart by understanding how the markets are trading right now. Of course, after a whole days of choppy move, we have tried to move up towards the day's high point in the last 15-20 minutes odd. You can actually see that the markets have tried to climb back above the 25,300 odd mark, but yet again is facing choppiness at higher levels, about 0.5% lower in trade as of now. 122 points gone right there for the Nifty. Let's also look at the Nifty Bank and the other sectors at large too. So when we look at the Nifty Bank at this point in time, you will be able to see that even the Nifty Bank is trading about 0.6% lower in trade. Among the sectors, you have media, FMCG, real estate, pharma, as all of those stocks that are still hovering higher in trade. Slight gains in autos and small cap index as well, but it's the metal stocks that have been so far leading the rally from the front, shining the brightest in the last many sessions. You have seen some profit taking, come in today. IT sector continues to be a drag. Again, 1% lower for IT. Metals are down by 5%. You can see even the financial services, banking names coming under pressure. On the Nifty, you have names like Silver, Nestle, Apollo Hospitals, Tata Consumer, Mahindra & Mahindra and ITC as the stocks that are hovering higher. But you can clearly see breaking news coming in on your screens, and that's the key reason why metal stocks are falling, viewers. You can see that silver prices and the precious metals prices have crashed in today's trading session. After the substantial rally that we've seen all through this week, MCX silver has crashed by 48,000 rupees. Gold is down by 10,000 rupees as well. And that's the key reason why some of the stocks that track these precious metals are also down in trade. Now, MCX silver is down by 48,000, trading at 3.5 lakh rupees per kilo. When we look at gold, it's now at 1.6 lakh rupees per 10 grams. At this point in time, gold is now down over 4% on MCX, whereas when we talk about silver, that's also cracked more than 10% in a single trading session. And that's why you do see that, these overbought zones, perhaps this catapulting rally is now seeing some pause at this point in time. We will, of course, try to decode this with our guest also joining in as to whether this is the starting point of a deeper correction or this is just giving you an entry point to enter into gold and silver at this point is something that we will try to understand with our guest shortly. But let's also look at some of the stocks that are hovering higher in the Nifty 500 basket. You have a lot of names. Raymond Realty is up by 18-19%. Raymond Lifestyle, so it's the Raymond group that's really doing well today. Raymond Lifestyle is up by about 12% too. We also have Vodafone Idea up by 11%. You also have names like, some of the other names that are coming in positive at this point in time. Juniper Hotels is up from the small hotel names. Walchand Nagar Industries is up by 9% as well in trade. You have Lambodra Textiles that's up. Shivam Auto Tech that's higher in trade as well. These are all the names that are truly buzzing in the Nifty 500 basket as well. Let me also highlight for all our viewers some of the other moving pockets that we can spot for our viewers. When we talk about the NBFC space, you have Credit Access Grameen, the names like Paisalo Digital, Canfin Homes. These are the names that are up. Within the PSU banks also you have selective names like IOB, Punjab and Sindh Bank that's hovering higher in trade. When we also talk about names within the defense pack and the other names that are hovering higher, you will be able to see that defense index is up by 1.4%. That's where some action is right ahead of the union budget. Garden Reach Shipbuilders is up by 7% at 2,700 odd levels. MTAR Tech is up by 7%. Data Patterns is up 4%. Cochin Shipyard, Unimec Aerospace and Cyient are all the stocks that are up and about in trade. Let's talk about even the auto ancillary names. You will be able to see Shivam Auto Tech, as we had already marked out. There is also Steel Strip Wheels that's up by 7%. Suprajit Engineering, Jamna Auto, Gabriel. These are all the stocks that are higher by anywhere between 5 to 10 odd percent. So while the main OEM stocks within the auto pack are down, it's the auto ancillary names that are actually hovering higher in trade as of now. Within the auto basket, you also have names like Uno, Minda, Bosch that's also up and about within the auto ancillary pack. Tourism space stocks are also buzzing. You have Chalet Hotels, 4% higher. You also have Lemon Tree Hotels that's up. ITDC is also higher in trade at this point in time. Those are also some of the buzzing news spaces that you can clearly spot and trade. And let me also highlight for you some of the other key news coverage that's coming in, some earnings coming in there. Keep an eye out on Motherson Sumi from the auto ancillary pack as well. We have seen that the earnings have actually come in for the company. That stock is truly reacting. You have October to December revenue at 2,887 crore rupees. This is a jump from a year ago. 2,300 odd crore rupees was reported last year, same quarter. Profitability at 149 crores versus 140 crores a year ago. So again, a positive one. You can see not Motherson wiring. We're talking about Samvardhan Motherson actually. So that stock is up and about. Look at that, 0.9% up. So it's improved from the day's low after the earnings. We also have some other names like Ajanta Pharma, Nalco, all of them are reacting to the earnings. But let's welcome our guest on board. Neeraj Diwan, market expert, is now joining in on the program. Hi Neeraj, good afternoon to you. Well, first up, Neeraj, help us understand. A lot of our viewers have this big question mark on precious metals, gold and silver, with the sharp fall that we've seen today. MCX silver is down by 10%, MCX gold is down by 4%. A sharp one-day correction has come in. This comes in after a huge rally that has taken place over the last 1 week, 10 days odd on gold and silver, especially silver, where we have seen silver prices jump by 20 to 25,000 rupees every single day. And now comes this sharp fall also. So how does one understand this fall? Is this giving an opportunity to enter, or is this a beginning of a correction that is perhaps overdue after this substantial rally that we have seen? How are you advising clients?
Yeah, good afternoon. Actually, last 2-3 days, by coincidence, we've been recommending profit taking in gold, silver, copper, because there was too much frenzy. Everyone was inquiring about buying gold, silver after this kind of a run up. So there was too much of a retail frenzy, too much of speculative buying which was happening. See, fundamentals are still intact for gold, for silver. Silver specifically, there are strong fundamentals to give a understanding that over the medium to long term, still the trend is positive, but there is a short term correction which was due because of this last 2-3 quarters frenzy move that we saw. So I think one should not be in too much of a hurry to start accumulating now. I think some more correction may come, because today the first day we're seeing a major correction. Let's wait for a couple of days and see how the movement is there, and then one can look at accumulating at lower level.
Okay. Let me ask you on the markets also. We have completely missed out on seeing any opportunity of a pre-budget rally this time around. How are you looking at the nervousness in the equities? Is there, any kind of an expectation of something that could come in as a negative for the markets, or are markets just holding their breath to find out what really comes in into the budget document? Can this be an opportunity when the markets turn the corner?
Yeah, see, everyone is scared of the FI outflow that is happening. So everyone really wants something to be addressed in this regard in the budget, whether it's capital gains, STT, some tweaking there, some changes there, so that this outflow should at least stop or reduce. So that the scare is there. So if nothing happens on that front, there's a scare that the FI selling may increase further. So that is the scare why people are not able to bet too much on the budget right now. There is definitely some, you can see some sector like defense, for that matter, has seen a good movement in the last couple of days, because defense budget, like everyone expecting it to go up. So there are some expectations here and there, but the major thing would be that what is it being done to address the FI outflow. So that's why I think no one is ready to put in big bets before the budget.
Okay. What's your expectation, particularly on these defense and railway pack sectors? Usually, right when the budget is round the corner, these are two sectors that become retail investors' favorites. Do you think this time around there could be any big bang announcement here? Should one increase their exposure ahead of the budget, or should one just be very cautious here again?
No, I think budget is coming on Sunday, so there won't be that kind of a participation also on Sunday. So you'll get time to look at what is happening in the budget and then take a call. So I would say that rather let's see what is coming in the budget, because last budget also there was good allocation towards railway, water, affordable housing. But then, because of the defense spend, I think a lot of that spend didn't happen. So let's take a report card on what actually was budgeted last year and what has been spent on railway, on water projects, on affordable housing, and then take a cue on what is the budget for the next year. Let's wait. Defense, everyone is clear that globally spending on defense is going up, so defense budget will go up. But defense sector anyway has reacted to that. It's gone up in the last 2 3 days. I think now let's see what is happening in the budget and then take a stock specific or a sector specifically.
Okay. Let me also ask you specifically on, the earnings, that we've been seeing so far. It's been almost like, 40-50% of the earnings that have already come in. How would you really assess the earnings that have come through so far, and what do you expect after the earnings?
See, the earnings have not been bad. So they've been two, three, a couple of, you can say two, three large cap which are not done well as far as earnings is concerned. Reliance was one which earnings were not good. HDFC didn't come out with ICICI Bank didn't come out with a good set of earnings. But then look at L&T. L&T earnings were very good. Margin improvement, good order book. You saw good earnings from PSU Bank. Saw good earnings from Nestle today. So there are pockets where you're seeing improvement. So I think earnings wise, right now I'd say it's more 6 to 7 out of 10. So there has been more, more companies which have come out with better than expected results than the ones which have missed.
Okay. Let me also ask you then, within the budget, what do you think can be the core focus apart from the sectors we discussed? Which other areas could be in core focus?
Yeah, it can be PSU banks also because there is expectation that FDI limit can be increased as far as PSU banks is concerned. That is one thing one can watch for. So, barring the other, infrastructure, economy-related sector, even PSU banks would be another sector which can have some positives from the budget.
Okay. And when we ask you, especially for capital markets related steps, do you see any kind of a relief coming in as far as the capital gains tax is concerned? There's also a lot of buzz around how the government should be focused on why the FII money has been fleeing away from India for last 1.5 years, and there should be some way of bringing that money back. Do you think there could be any kind of a measure that could bring back or attract foreign investment money via institutional money into the markets also?
Yeah, that is something which everyone worried about because there has to be some step taken in that direction because now it is impacting the rupee also. The kind of continuous outflow every day, 3-4 thousand crores are selling, and less anyway because of trade deal. There's a mismatch in imports and exports. So all that is putting too much pressure on the rupee. So there has to be some measure taken. I think some. Whether it's capital gain, STT, something needs to be done on that front to attract foreign money.
Okay. Let me also ask you, when it comes to, the key sectors that you would still want to stay away from, what would those sectors be? Are there any pockets that despite the ongoing consolidation, correction in the markets, still some pockets give you that feeling that, you still need to be away or cautious at this stage?
I would say that everyone who is expecting a trade deal to happen soon should wait and not really invest in those sectors which are totally exposed to a trade deal. So that may take some time. So let's get into that only once there is a trade deal happening and we get clear indication of the trade deal going through. So sector related to US India trade, I think those one can still avoid.
Okay. In fact, I was going to be coming to that only. Recently, what we've done is with European Union, this mother of all deals, as it was being called. You rightly pointed out that the deal signing will finally take some time, and there has to be some patience to be had as to what will be the final contour of the deal. Will be seen only much later. but we did see a knee-jerk reaction in the markets, several sectors that reacted either positively or negatively to the opportunities that the India-EU FTA would present. And similarly, we've been having what about 3-4 deals since last 5 years, with several other countries. There are more to follow going forward. Of course, US deal still is a big overhang, but what is the kind of opportunity that such deals present for an average retail investor to probably think of any rejigging in their portfolios?
See, there are good companies, even in the textile space, there are very good companies, just to name, I'm not advising to buy,
Yeah.
but like Gokuldas Exports, it's a very good company. It's corrected a lot because this US-India trade tensions which are not going through. So these kind of companies will have opportunities there. If they correct a lot, there is an opportunity there for a long-term investor who's there for 2 to 3 years to invest in those stocks. Like you saw a knee-jerk reaction in automobile. They corrected because of the EU trade deal. See, that is not happening anytime soon. So it will happen only in 2027. So there you get an opportunity to buy in those auto stocks which have corrected because GST benefits which have come their way, the increase in sales which happened in this quarter may continue in the last quarter also. So there are opportunities in both sides. Stocks which correct because of this deal happening or the announcement of the EU deal, there's opportunities, and other stocks which have corrected because the deal is not happening right now with the US, and for example I took up this textile stock, then there's this shrimp exporter. So there you get opportunities which are good companies for a long-term investor.
Okay. Apart from the auto space, I'm also seeing a sharp correction in the metals rally. We were discussing the precious metals, but even the base metals, that's also correcting today after a 3-day stunning move. This entire sector is down. There are many others that are also reacting to earnings, like Nalco has slid about 9.5%. We are also seeing a global impact, local impact, as well as the earnings impact there. Nifty Metal Index is now down by 5.3% at the day's low point. Do you think the kind of stupendous move we were seeing on the metals is largely behind, the best of the rally is behind?
See, one movie behind us. See, there was a frenzy which happened, like copper, aluminium, everywhere. Non-ferrous metals saw a good rally, and it moved to ferrous metals also. See, I'm saying medium to long term. Still, I'm positive on the sector, but this correction was due because the frenzied move that we saw. So the stock can correct 20-25%, like we saw silver is already corrected, I think 17-18% in ETFs today. So you can see the 20-25% kind of a correction across, like we saw Hindustan Copper corrected today by more than 10%. So after this correction, I think it will become again, a healthy market where you can invest in these stocks again. But I think wait patiently, you'll get opportunity.
All right, okay. Let me also come to some of the earnings specific, stocks that we've been seeing as a reaction today. Let me come to the new age tech stocks, especially the food delivery space. What we've seen with Swiggy happen today is something. The stock tanked by 7% after the Q3 loss widened to 1,065 crores. Just wanted to gauge your understanding of how are you approaching these favorite stocks within the new age tech space for retail investors, Zomato, Swiggy, and many others in the same space as well. What would you assess since the earnings picture still does not show a marked improvement?
See, you have to see stock specific, but I think there is opportunity there. I'm not saying there's no opportunity in these tech stocks. There is opportunity because the kind of infrastructure that they have, kind of delivery model that they have is something which is very difficult to replicate. For example, Eternal, the results were not bad, and the stock has corrected a lot from the peak it saw. I think there's the opportunity for a retail investor, for a long-term investor to get into a stock like Eternal, because whether it's Zomato, whether it's Blinkit, it's very difficult to replicate those kind of models. And then even to come with stocks like Paytm, the kind of brand name that they've established and the kind of reach that they have, they're also when the stock correct, there's an opportunity. So one has to be stock specific. There's opportunity in the sector. There's opportunity in new age technology companies, new age platform companies, but one has to be stock specific then.
One has to be very stock specific at this point in time. Okay, that's the clear news that's coming in. Let me ask you on the consumption story also, Neeraj. How are you looking at the consumption aspect? Last entire calendar year 2025, the government's focus has been to push consumption. Now, whether this was by way of changing the indirect taxes, passing on benefits from direct taxes in the previous budget, altering the income tax code. The focus has been largely to put the money in the hands of the people and see how the consumption cycle can be revived. Give me an understanding of where all have you seen the impact already coming in? Will there be any key sectors where most of the impact will be seen in the current calendar year 2026?
You saw a good impact coming in the last quarter also, December quarter. Auto companies saw the maximum
Yes.
impact there. So I think that should continue. So that auto space is one, but then even FMCG, staples also, there also you see, better earnings coming from Nestle, for that matter. So there is opportunity in the consumption space, whether it's stable companies like Hindustan Lever, Nestle. I think they're also valuation-wise there's comfort. I think they can see further improvement happening as far as pickup in demand is concerned, and even autos, for that matter, should continue doing well even in this quarter.
Okay, fair point. I hope this has answered your question well. Viewers, let me ask you on some of the sectors that we have not touched base upon. Let's talk about the real estate sector. How are you approaching the sector as of now? Where do you think things stand here? There are a lot of mixed signals that are coming in on ground for the real estate space. So, how should one read into it?
The real estate has been under pressure. See, I track the NCR market very closely because I'm from Delhi. So here also we saw the NCR, there is pressure there. Sales are not picking up. DLF came out with results. The pre-sales were really bad. It was, I think, 400, 500 crore pre-sales where they were able to do 4,000, 5,000 last year in the same quarter. So there's definitely pressure as far as real estate is concerned. But then one should be accumulating these dips in real estate. But look at companies, look at the markets which you can study. Suppose one can study NCR, one can look at DLF for the one understands Bombay market more. You look at a Bombay player, which is more prevalent in Bombay, Pune area. So play those markets, and there when you see some revival, you can accumulate right now and then increase your purchases at that time. But I think there is opportunity with interest rates low, with some pickup I'm expecting some pickup to start in real estate also. So start accumulating, but start accumulating regional players which you can understand that region market.
Okay, fair point. Let me also ask you on the pharma story, what to expect here? Of course, this story has a lot to do with what happens in the external environment, in the export sector as well. But pharma story, how are you seeing? Last entire year was talking. There was a talk about CDMO as the next big theme, etc. How are things placed for the pharma sector right now? What's your approach here?
In pharma, I'm positive on CDMO and API space. So I feel companies which are more focused in CDMA, API are the ones which should do well. We saw a good set of numbers coming from some of these players also this quarter. I think they will continue. DV is definitely the top of the pack, but then their stock is not cheap. It is expensive company. But there also, when you see corrections, one can accumulate. So the other companies also you tend to see, like CDMA, some of the companies are growing at 30-40% because they have a small base. So those, maybe 10-15% exposure of the sales to CDMO can grow at a much faster pace. And APIs are doing well as far as these companies are concerned. So these companies in this sector should continue doing well.
Should continue to do well. That's a clear hope that's coming in. Let me ask you a series of any key stocks that you could probably list out for our viewers that you would be probably focusing on ahead of the budget and even beyond.
See, I like defense and railway space. So BML is one which is exposed to both. So for a long-term investor for 2 to 3 years, let's not play only for the budget. They can be disappointment, they can be positive, negative in the budget. We can have a short-term impact, but to look at a medium to long-term, railway defense is one space which should do well. Financial is one space which has been doing well, should continue doing well with interest rates low. NIMs have now stabilized. So PSU banks is another space where one can focus on. Metals only in a correction. And then IT space is another space where we saw better results this quarter. Some companies like HCL Tech came out. HCL Tech came out with good set of numbers. Infosys numbers, at least the next quarter forecast was not bad by the company. So, you can see opportunities in these sectors, like whether it's IT, whether it's PSU Bank, whether it's capital good infrastructure. I think there is a medium to long term opportunity.
Okay. Let me also bring up for you some of the other key spaces. The broader markets is something that I wanted to discuss. We just have about 4 minutes to go before the market shuts off. Broader markets picture, do you see that improving in the current calendar year, mid and small caps?
Yeah, I think there's some improvement has already started happening there. So there is some buying which we saw. So I think small cap and mid caps, if you select your companies wisely, can give you much better return over the next couple of years. These, because they're you getting opportunities, good valuation. There was earlier issue about the valuation, which now has got rotted to some extent in a lot of companies. So you can see opportunities there in infrastructure, related companies, capital good. So there is opportunity definitely in small and mid cap, which should now be accumulated.
Okay, all right. Thank you so much, Neeraj, for being with us on the show and for highlighting for us, various insights into the markets and how to read it right ahead of the budget. We'll, of course, get to speak with you post the budget now to decode that for our viewers as well. Thank you so much for being with us.
Thank you. Thank you for having me on the show.
All right, viewers, 94 points lower, 25,324. So we've tried to again move up towards the high point. About half the sectors are hovering higher: FMCG, media, real estate, autos, pharma, PSU banks, even the small caps. But metals are down 5.5%. IT is down over 1%. Financial services, private banks, that's also cracking in trade as of now. So top movers on your screens on the last day before the budget comes in is Nestle, Tata Consumer, Apollo Hospitals, Mahindra & Mahindra, ITC, a large part of those FMCG names there, State Bank of India, Eicher Motors, that's also up and about in trade. But what's dragging clearly? Hindalco, Tata Steel, metal space. Again, JSW Steel also down, ICICI Bank is down, ONGC and Coal India, as also some of the other stocks that have dragged in today's trading session. Let's also pull up what's happening in the broader market. So what's down? South Indian Bank, 14%, 15% down in trade. Not a good day for this one. Hindustan Zinc, 12.5% down. This is the proxy play to silver, and that's where the pain point emerged as far as the metal stocks is concerned. So Hindustan Zinc, which has been only rallying, mirroring the stunning silver rally, is also coming down heavily after the MCX silver prices have crashed, and therefore the stock has also come off. Nalco about 11% lower. Hindustan Copper also, in fact, about 11% lower. Again, this is entire the metal space. Remember, Hindustan Copper over the last 2 months ago, it has rallied about 133%, and that's the kind of stunning move that you've seen there. Graphite India is lower. You also have names like many. Muthoot Finance is down. So every company that has been tracking the gold financing story is also coming under pressure. 7% lower for Muthoot Finance. Manappuram Finance also you can pull up there. That's also under pressure. So those are some of the companies in the broader markets that are not doing well. What's doing well, in fact, is like Lambodara Textiles, 8% higher. You have VIP clothing from the textile space, that's also up and about. Then you have MTNL, that's up by about 10%. So some auto names are hovering higher. The Raymond stocks I already pointed out, they are hovering up in trade as well. That's the action point as far as the broader markets are concerned. So let's look at the markets once more. 25,318, about 100 points lower in trade. That's where we are going to be probably ending at, right ahead of the union budget to be presented on 1st of February on Sunday. And of course, that will be an important day for everybody to look at the markets also. Yes, National Stock Exchange and Bombay Stock Exchange both will function. Your stock markets trade will be open on 1st of February on Sunday, and we will be tracking all the market cues, everything that buzzes with every word that Finance Minister speaks. So stay tuned with us for an entire days of buzzing action on 1st of February starting 8 a.m. on your favorite channel. Unstoppable coverage that we are going to be doing. There's going to be 8 a.m. to 3:30 p.m. without any breaks. You'll be able to see everything, every minute of an action coming in on the budget day. So stay tuned for that too. Thank you so much for watching.
India is set to host a major diplomatic gathering as more than 10 Arab foreign ministers converge in New Delhi for